Hi everybody, Eddie here. Going to do a quick market update. So there's a lot of people message me asking what's going on with the markets. Tariff wars, that's what's going on. So I look at this as a temporary pullback or correction. I think we still got room to go. We could make higher highs or we don't. If things get worse, we go into recession, and then this could be the start of the recession. Or if the things get better, since there's a lot of catalysts coming on. So if, say, the tariffs goes away, I think we could get a pretty sharp V recovery from here, and then we can continue higher for the next, 8 to 12 months or so, maybe a year, a little bit over a year. So the thesis is still there. I still think we could get a blow off top um, before the recession happens. So we're not quite in a recession, and the employment numbers actually still doing pretty well. So that's usually the sign of a recession is when unemployment start rising sharply and jobs market starting to come down quite a bit. So I use that as a trigger. For a potential recession, we have not quite seen that yet. This is more like a tariff war. We seen that happen like in Trump's first term, where we get that very sharp sell off, and then it cool off, and then we actually went up for another year before we actually went into a bear market. So this could be something like that. Technically, we're still in just a correction, about 20% pull down. So if I take a look at that, I think that's about from the highs to the lows. Yeah, about 21%. We didn't close at 21%. Obviously, we closed around just above 20%, 19.5%. So that's still in corrective territory. Right now we bounce. So you can see that I marked these down with my these levels with my Discord members. So I was looking at this as a potential decat area. Uh, or you can come down to the extended area in the ABC corrective wave. So this is like A, B, C down, and then we kind of hit just slightly above this extended drawdown area and bounce off there. So right now we're back up above 5,000. So right now we're just sitting around above the 8 EMA daily. And I'm looking around the 21 as a potential target for next week. And if we can break above the 21, there's a gap over here that needs to be filled still. So if we can close above, say, 5,600, there's a really good chance that we just going V up, have a little pullback, and then we're going to continue higher from there. So a lot of things have to happen in the right way. We're still net short in the markets, so there's still a lot of people shorting. So if there's any type of bullish news catalyst, we could see potentially for the market to go back up again, and then could actually just V up. So I'm looking at around 56 to 5,700 area as a potential area where I think that the market could go up from there, because that would create a higher high basically. So right now we're still in lower low, lower high area. Once we go break that pattern and set a higher high and higher low, that potentially is the bottom, and we go higher from there. So that's what I'm looking at for the next few weeks. Sometimes it takes a little bit of time for this to digest. So if there's no news and they're still waiting around, because I think China retaliate with tariffs, but Trump haven't said anything yet. So next week he could say something, and then we go back down again, or it's going to be chopping around for a little bit before we actually go higher. Once they I think if they can make a deal, we can go significantly higher. If they don't make a deal, then we could be stagnant. So we still could go up, but it'll be like a slow grind up instead of big V up, right? In order to get a V up, you need positive news. So anyway, I'm trading mostly for a short term. My long term portfolio is all cash now. We gone cash like 2 months ago, like in February, I think, when we hit the 6,100. So if you look at my previous videos, 6,100 was one of the targets there, in the lower end of the targets, and the higher target was around that 63, 6,400 area. So we hit 6,120 as the peak, so which is pretty good. 6,150, I should say. So that was pretty close to the target, and And as soon as it could make that higher high right up here, it could make that higher high, and it start breaking back below the 50. That was all of it. That was gone. So, but I thought we actually would actually bounce back here, or at least come down and just bounce off the 200 and retest before coming down. But it didn't quite do that. Came down pretty sharply. It did retest the 200, and then it really came down, right? So nothing good ever happens below 200, especially when it went down and retest and then crashed down. So I didn't really short this because I thought it was more of a temporary and potentially a double bottom bounce, but it kind of escalated worse. All of that drop happened literally in 1 week, so it was quite steep and it was really really fast. I think it was the fifth fastest drop in history. So that was quite a drop right there. We made significant gains in day trading. That's where the money really is right now. Is short-term trading. Long-term trading, you only know how to invest. I feel sorry for you because the next couple of years is going to be brutal, right? The volatility is going to keep on going, and if you don't know how to short-term trade, then you're really missing out one of the best trading markets in history ever. So. Even some of our Discord members, and we have somebody in the room this week that made over $60,000 in a day trading SPX options. So that's how good it is. And I mean, he's not quite a pro yet. He's getting there. He started out 3 years ago with me as a new trader, but now he's being very consistent. He's making quite a bit of money day trading options. So like this is definitely in the market to do that in because if you have the skill set, this is like a day trader's dream. Like you don't get these markets that often. When they do happen, you really got to take advantage of it. So where I see market going, well, I'm looking at short term only right now. So I'm looking at this level, this 5,500 level, as a key resistance zone for next week. So if we can go through this area, this gap fill is a given. So that this 5,600 zone should be filled. So if we break through, we enter the gap, we go to 5,600 area. If we're going to keep going, 5,700 would be this area right here, and then 5,800 would be the 50 period moving average. Once it's above the 50 period moving average, then potentially this is also where the 200 is. Then I could say that we are kind of out of the corrective wave and start changing trends and go back bullish, right? So at the moment, we're just kind of taking advantage of the volatility. I did nibble a little bit on some swing trades on this bottom right here. So I've been adding to my Bitcoin positions as well as that is quite so that's so off quite a bit, and we'll look at that chart a little bit later on. But right now it's not a great time to go heavy. It's a good time to start a position, right? So how I normally do it if I am going to do a longer swing, what I do is I start off with like a third or a fourth position, and then I add on to it as it goes in my direction, right? So that's the way you should be playing it. Keep your tights, keep your stops in place in case we do break down. And if we do break down, it most likely is going to reject off the 21 and come back down. If it rejects the 21 and then break back below the 8, there's a good chance we're going to go lower, right? But if it goes to 21 and it holds between the 8 and 21, it's just going to consolidate and then it's going to take off, right? So that could happen for next week. Right now, I'm kind of just waiting and seeing to see what we're going to do around this area because this is the area where the trend potentially will change. And that's a very important level right here at that 5,500 area and 5,600 area. So once it's above that area, then I can start adding to my swing positions. And if we get rejected, then I'm looking at these levels down here. I'm looking at 5,000 as kilo, 4,800 is a very important level. So if we go below 4,800, it's a long way down because there's not much going on down there. So if I take the drawings off and go on the weekly chart, you can see a little bit more clearly that potentially we can drop all the way down to the 200 in the weekly, but you're looking more at around 4,000 if we're going to keep going down, and that would be a pretty significant drawdown if that happens. Come down to 4,000. Yeah, that's about 35% drawdown. And then if it comes down to 3,500, which I think the target will be for a recession, uh, potentially, is around that 40 some percent. And then the COVID lows will be your ultimate bottom at 65%, which is a really crazy, crazy level. If we come all the way down there, that would be the great reset, right? So be very careful on your investments if you are investing. If I were you, this is not financial advice because I don't give financial advice. This is educational purposes only. I would start trimming into these aggressive rallies. Not down here, maybe more around that 5,700 zone and on the 6,000 zone, and then leave like a little bit for it to ride because potentially, if we do V up and we continue the trend, we could be hitting somewhere around that 6,500 to maybe even 7,000 area because if this is going to rally, we won't get a blow off top. So how blow off top happens is it's a one huge big parabolic move, and then a huge like straight 9-degree angle drop. So what happens there is institutions use retailers as liquidity to get out of the market. In order to do that, they need to suck everybody into these FOMO trades, and then that's how they dump it on you, right? So that's how the market works. It's been working like that for 100 ever since the market came out. So you guys are liquidity, so institutions don't like to lose money, right? So so yeah, so if that scenario happens, and in order for that to happen, you really need to break out this all-time high right here. If it breaks out the all-time high, then that scenario is in play. If it doesn't break out that all-time high, we potentially just V up, create like a double top, and then we could roll over. So there's a 90-day pause on the tariffs. So there's 90 days to make deals with these countries. And if they don't make a deal in these 90 days, potentially we could go back down, right? But if they could make a deal in these 90 days, and then they also have that corporate tax cut bill coming through, if that comes through, it could pull the trigger for a giant short squeeze because everybody and their mothers are shorting right now. So you can tell by this weekly candle here how much the shorts already got squeezed, and still there's we're technically still in a downtrend, so there's still a lot of shorts in there. And any type of good news, any type of like tax relief or tariff, good tariff news, we're going to send this market all the way back up to the highs again in a flash. So that would be like a V-shaped type of recovery, which happens quite often in these type of markets. As more and more retailers are actually jumping into the market, this is a really that's how fast we're actually moving these markets up. Anyway, that's basically the plan for SPX. So if you look at the Nasdaq chart, it's very similar to the SPX. We're hit these big support levels right here, and basically just looking for a bounce off this level to retest this high right here where the 200 is. And once it's above this high right here, you can pretty well say that we're back in trend again. So at this point, it's just a correction, looking for recovery, looking to set some higher lows off this level right here. Once it sets the higher low, then you can expect we can see the higher high. Once you see that, then potentially we go higher. So mid caps, they all kind of look the same. All the indexes kind of look the same. The only one that drop a lot more than the others is small caps because obviously interest rates are too high and small caps do not perform in high interest rate environments. So it's coming back down to this multi-year low right here. So it's kind of holding. This has been a support for the longest time. So potentially a nice bounce off this area. So you're looking around like 208 if it does bounce. So that's pretty significant return if it does go up actually from this area right here. So it might be a good short-term play there. Um, this is RSP. This is the equal weight S&P 500. So same chart, right? Very similar. Basically looking for this to come back up there. I think they all kind of look the same, to be honest. Um, so this is Meta. We're gonna go through some of the big seven. So the Meta's kind of look like a pretty good opportunity to buy right here. As you can see that we bounce off this support zone right here. That's been tested multiple times as resistance and support. So this is a good area as potential support. If say this does break below this area right here, then potentially it'll go much, much lower, probably all the way down to 300 if that area gets taken out. So you're looking at this as support if that gets taken out. So if say this is just a dead cat, so we could hit a dead cat, come through here, and then retest, and then boom, come down here. That's the bear scenario. So the bull scenario would be bounce, hit up here, retest to 200, and then back to the all-time highs right here. Either go higher or it's going to come all the way back down. And that would be like a double top formation play, and we could chop around for like a year and then roll over into the recession. So that's what I'd be looking for in the play would be the dead cat from here. That would be the only play I would play for short-term trades because anything like above the 50 is too long. So you kind of have to look the way I teach my students, the way we trade, because we're short-term traders, we trade it level per level. So if anything changes, like if this say this down, if I were going to short this and see the rejection 200, I'll short it. But if it changes, if it doesn't come, make a low low, and they start making let's say a higher low, we switch directions. So don't take our videos like it's a definite path. The market has always two paths, one bullish, one bearish, right? It really depends on the key levels. That's why we trade level per level. That's the way I teach my students. And that's why it's really important for you to learn how this stuff works because you can do it on your own. Um, and have somebody like me to guide you through the markets as the market moves. That's why we have a Discord community, right? If things change, that's where we share it. Right. So anyway, yeah. So the scenario right here, we're like two scenarios there, right? So if it's up scenario, it's going to V up, retest, and then go higher. If it's going to drop, it's going to fail at the 200 and then come down, make a low, low, and then keep on going lower. So that's the way for meta. For me, I think we're going to go higher. So I'm thinking it's going to hit at least 600, maybe 650. Anything like at 600, I'd probably be exiting, maybe 620, and then let's see what happens after that, and then we'll make a decision there. Tesla. So Tesla is forming somewhat of a base, right? We're back into the value zone, which is the most traded area. It's been in this area for the last few years. Um, so you can see some of these supports right here. So if this actually holds right here and it forms, say at bottom, you can see the volume start coming through heavy right here. So last few times the volume came in heavy like that, we go higher. So right here, I'm basically looking for a higher low and then breaking this high right here. This 290 $300 zone. I always use that zone because it's not an exact level. It's never exact level. So I'm looking at this zone right here. If it's above this zone, I'm gonna set an alert right here. If it's above this zone, I likely would add to it. I do have a very small position in Tesla, and we have traded a couple times already from the lows off the 200s lows. So we actually did pretty well off that bounce. At least for my options, we did really well on the options. I think it was a double and a triple. So the options did really good. Anyway, the next target is really that 300 area. Once we're above that 300, we're going to go probably around that 330, 350 zone. So you're looking at around this zone right here as a potential target. And then once it's above here, then you're looking at the next zone, right? Which we trade level per level, like I said. So then you're looking around that 400, between 400, 450 zone. So just aim these targets. So that's the way I trade it. I go for the trade from here to there, see what happens there. If it goes above, I go back in, and then we go for another trade. And then if it gets rejected there, then I just exit. If it keeps going, then I go for the next block. Right? That's the way we trade. Um, Amazon, same thing. We're in this big value area right here. It really needs to break above, say, well, actually break above here, which is around that 200 something to really consider bull side. Right now, it's more, I'm looking more of a dead cat into that 200 area. So that could be a play from here to 200 would be like more predictable play. And then above that 200, there's quite a bit of supply right up around that 200 area. If you can hold and break above, then it can go up and retest this upper zone right here. So you're looking at this as your first target right here, and then your next target's more towards like here, and then it's all-time highs after that. So you can see I already set my alert up here. Um, Amazon, I have a very small position on this. I have a little bit of everything in the mags, like just a little bit. Mostly Lotto Leap options. In case we get big full V up, those are always going to print. But for like trades itself, I'm very light. I would say about that's including Bitcoin. I'm on about 30% invested in my trading account. So not much, but I am looking to add there pretty soon next week if we do break S&P 21, right? If we break S&P 21, I'm adding, right? So use that as a sign. Anyway, Google, same thing. Google, we're back into the some of the major support area right here. So this is the big demand zone. If it's hold, this would be the area to hold because as you can see, this area has been tested multiple times. So this is the area to hold once it breaks. Where you're looking at about 170 area. So right up here, and then it will be the highs, right? So that would be the trade. It's from here to there, and then if it's above there, then we go for the big run. Um, NVIDIA, there's a huge open interest around 115, I think, on NVIDIA. So you're looking at this 115 to 120 area as a target. You can see this is kind of like a distribution zone. This is a very heavy distribution zone, actually. So if NVIDIA does come up, I'm thinking you'll make like either a lower high or we're going to get stuck in this distribution area. If say it gets massively um, short squeeze, then yes, it could potentially go much higher. Because once it breaks above this all-time high, it's the moon for Nvidia. There's no stopping it then, right? So, but before we get to that area, it's a lot of resistance up here, just so you understand. There's a lot of resistance up here. You could potentially just play a dead cat off this area. I mean, you can see that the 200 is actually rolling over and actually start trending down. That's never a good sign. So, I'm thinking you'll chop around this area right here, up here, but not. I have a little bit of it, but not much. I'm mostly playing the deck cat. Right now it's all just about the deck cat, nothing else really. Apple's at the main support right here. You can see that it's a very heavy support zone. It's bouncing off that level. So you see I drew these lines a while ago with my group. Um, yeah, in our trade ideas. So it's bounced pretty good up here. Potentially you're looking at this to come back up around between 220. I'm saying about 220 area, yeah. So around 220 and this area right here will be your supply zone right here. If you can get through this area, we'll go to the all-time highs. But you basically you that's all you want to aim for is around here. Microsoft, same thing, right? So they all look the same. So you're looking at this as the resistance zone right here, right? This is your big supply zone. Above here, you potentially could do pretty well. So how these usually work out is if they go up, they'll go up like this, they'll retest and then they'll like maybe chop around and then you'll go, right? That's usually how it does because this area right here will require a lot of bull volume to get through, right? Because this looks like a whack off distribution. So, if it does, if not, if this is bearish, say we run up, we hit here, it's likely we'll go lower, right? So you'll end up going like this, and this would be like a huge waterfall, right? So just keep an eye on these very carefully because, like I said, right now it's more all about that dead cat. It's not really about investing because I don't think this market's investable right now. It's more of a trading environment, and it's a trader's wet dream, really. It's day trading heaven. That's definitely, but also short-term swing trades is going to be really, really good as well if you have that risk appetite for holding overnight. So the best way to trade that really is with options because options has a set loss. So if you say expect the option to go to zero, invest the amount of money you're willing to lose, then you're fine. If you invest too much, thinking you always win or expecting only profits, then that's where you're really going to get screwed hard, right? So when you're trading options, that's the way I start doing now is just expect it to go to zero. That way I won't size it. I can size it more appropriately. And if it works out, I make a lot of money. If it doesn't work out, then I lose the same amount I'm willing to lose, right? That's a very easy way to trade this type of market. If if this was more of a stable market, then it's a whole different tone, right? But this is not a very stable market. This is a very, very volatile market. It's very easy to make money. It's very easy to lose money. It's really, really fast moving. So if you don't know what you're doing, it's the best is just stay on the sidelines, right? Otherwise, you really want to take advantage of the volatility. All right, let's take a look at Bitcoin. So I thought up here we were going to just come flatten out and then keep on going. Usually that's the way it goes, but we have a pretty strong corrective move right here. It hit support. We're retested that breakout area, which is right here, right? We broke out of that recent high, came back, look where we landed, exactly where it was, and then we bounce off there. So the next target really is back in this distribution zone right here. Same thing, right? I'm looking at 92K as a target. If we go above 92K and we retest and then goes back up to 100K, we're definitely going to just rock it up there and keep going, right? Right now, Bitcoin resembles the 2017 cycle. So 2017 cycle, it's actually a really good cycle. It basically just went up like this. So you see how it consolidate went sideways and then it broke out, but it retested that high. So we're right around right here. If this is the 2017 cycle, we're right around this area right here, right? And then look what comes next. One giant, giant move right here. So if this is a 2017 market, that's what's going to happen. This is what a blow up top looks like. It goes parabolic, sucks all the retailers in, and then dumps it on you. So just careful of that because that's what it's leaning into. Um, so I'm looking at that. I'm still each time it dips up here is a buying opportunity. I'm slowly accumulating. I'm still invested. Like I say, majority of my portfolio right now is actually Bitcoin because why invest anything else? If I'm going to invest, I'm going to invest in the best in class, which is Bitcoin. It moves the fastest. It has the biggest potential of gains, right? And now there's options. It's a momentum player's dream to be able to trade Bitcoin with options, right? So whenever the momentum comes back, you can expect me going pretty heavy into the options with Bitcoin. But at this point, I am taking the more cautious route, which is selling puts to grab shares of Mara, MSTR. I don't have much coin. I just put it. We'll look at a chart a little bit later. I'm more into Mara and MSTR and IBIT, which is the actual Bitcoin itself. So I'm majority IBIT because it's the safest route to enter Bitcoin. And then MSTR and Mara is more of a speculative play because they're leverage instruments. MSTR is about I think 1.5, 2.5 leverage on Bitcoin. So if you're buying MSTR, you're basically buying almost like a leverage ETF, except for it doesn't decay the same way. So MSTR is a good way to play that. It's more higher risk, but also higher reward, right? IBIT is more stable. You don't get the same type of return, but that return is still very, very juicy, especially if you're using options. And I wouldn't try to time it short term because Bitcoin tends to be very, very whippy. And when it goes, it just goes, right? So you can't be out of it. You can't do a lot short term because the swings are quite choppy. The best way to play is to play the cycle, which usually peaks around October, November, December area. All right, so that's where the peak will be in for this cycle. I'm thinking because April is usually a pretty good top, but we're midway into April now and we're still not moving, so that could get delayed. So that's why I'm thinking it will be more like 2017, where the move up is going to be steady all the way up until we hit that parabolic move into the all-time highs. All right, wherever that would be. I'm looking at around 150, 130 as the first target, then 150, 180, 200, 250, and then much, much higher if it breaks 250. You're looking at around 400,000 if that happens. Okay, Mara. Mara is at this. Mara's been very frustrating this year. I traded this multiple times, but I've been holding this since 20. I mean, it's free. Don't get me wrong, because we saw a lot of strangles on the way up. So it's free. I did got stopped out a few times. I'm back in again, and I'm selling push to get shares up down here because it's right at big support. It really needs to break above that 30 and hold above that 30 to really get going. So, but even from here to 30, that's almost a 3x. So, you really want to take advantage of this at these price levels, right? Don't be afraid because they hold 40 some thousand Bitcoin and they're copying MSTR strategy. So if Bitcoin goes up, they go up. So, just hold on to this at these price points, add to it. I'm adding to it and I'll be adding until 15. Once we're above 15, then I'll start unloading some on the way up to the 20s and the 30s, right? And then over there, I then change my strategy. I might unload the shares, but I will add like maybe options, right? To get more of the upside potential, but without the same capital. So it'll be less risk. But we'll see what happens when we get to that point. The only way to find our place is to join our Discord group. We do have a Discord membership. You can sign up at leecapitaltrading.com. Link in description below. Make sure you like and subscribe and hit that bell icon whenever I update. Anyway, MSTR looks like a base. Looks like a wedge, right? This looks like a base, double bottom, temporary. So if we break above this say 340, 350 zone, we're going much, much higher. So I have targets of this of crazy targets. So I'm looking at 600 as the first as the target. So that would be slightly higher high from the all-time highs. That would be the target. That's the low end target, and then I'm looking at like 900 and then over 1,000. So yeah, it looks crazy, but guess what happens when if Bitcoin hits 400,000? Guess what happened to MSTR? It's going to be way over $1,000 if that happens, right? And then I'm looking at a coin. I don't really trade coin that much because coin is an exchange. It's not really a leverage instrument of Bitcoin. So I like to trade Bitcoin itself because Bitcoin is not a business. I don't want to trade a business. I want to trade the actual Bitcoin. So that's why I don't really trade coin. But when it moves, it does move quite well. So it's at these support level right here. It's basically a bounce area. You're looking at around at least 250 as a target, and 300 and then 350 and possibly 400. We can go back to IPO prices as well if the market goes really, really well. Expect this to go up as well. So that's just the way it is. Take a look at gold. Gold's been a crazy play. Shoot, where's gold? Um, so I told my students, I said I had to go to another list. I posted this in our tray ideas. So if I put the what happened? Where's gold? Where's all my drawings? Some reason all my drawings disappeared. Did I just clean out my drawings? Anyway, I forgot where I posted it. It was right here. Yeah. this is where I bought physical gold in this wedge right here. So I posted this in our Discord group, in our trade ideas. I didn't buy it with shares or stock because I don't. It takes up too much capital to do that. So I have like a different area where I just buy the physical gold and leave it at the bank. Um, that's the way I like to play gold. I don't like playing it with ETFs or stuff like that. Mainly because the return percentage wise is not that big. But this year's been crazy. It's way up. Like it's let's see. It's been going up since this like this decade long sideways right here. Well, I mean not decade long, but a few years sideways right here. Once it broken out of here, it went nuts, right? And so if you measure that out, that's almost a doubled from that to up here, 55% for gold. That's better than SP 500 in the same time frame. So right now it's going parabolic, mostly because the other countries are basically dumping treasuries and going into gold. And if they try to form like another currency, it's going to be backed by gold. So that's why it's just going crazy. And gold worked really well in stagflation, which we could be entering. But like this chart doesn't lie. Money's flowing into gold. So it's really funny how gold's going up like this and Bitcoin's not moving. Usually, Bitcoin outshines gold by a long mile. So I'm thinking at some point, it's going to, that money's going to flow back into some Bitcoin, and then we're going to get one giant parabolic move, especially if government's starting to invest in Bitcoin. If you understand how the Bitcoin cycle works and the potential power of Bitcoin once everybody start adopting to Bitcoin. So treat Bitcoin more like digital gold rather than a currency because it's not a currency. It's quite slow actually compared to like Solana and stuff like that. So it's not great for making transactions like to buy stuff, but it's great storage of value because it's limited supply, right? That's the attractiveness of Bitcoin. Is the limited supply, right, and high demand. So when you have limited supply and high demand, what happens? Prices only go up, right? So anytime these dips happen, it's a good time to buy, especially when institutions starting to adopt to Bitcoin, as well as governments starting to adopt to Bitcoin, and then it just becomes an asset, right? So when that happens, and everybody start using it as a reserve currency, or whatever you call it, it's really good for Bitcoin. So at these prices, it's a buy. Anyway, that's pretty much it for this point. If you want to follow my trades, what we're looking at, how we trade, I do market update every day to see what the market's doing, and then throughout the day we day trade, so we look at levels throughout the day. Lately, I've been doing a lot of live day trading with the group, just to walk through like the setups as it's happening. So that's only available for course members, but it's a really good way to learn, and you definitely want to learn how to day trade because I think in the next few years that's all it's going to be is short-term trading, not really investable. Um, so if we ever go into a recession, we could be entering one of those lost decades, which means markets go sideways for like 10 years. If that happens, it's not investable environment. You really want to learn how to trade. Anyway, like I said, like, subscribe, ring the bell icon, check us out. Got leadcapitaltrading.com, link in description below. I'll see you guys next time.